What's going on, everybody? Welcome back. Nice to see you. Thank you for tuning in. Excuse me. I don't have a fancy intro tonight because I'm flying solo. And so I forgot up until like 10 seconds before I clicked that little button that I don't have the intro. So we will just kind of make do. You guys know what happens at the intro anyways. So good to see everybody. Welcome back. Thank you for tuning in. Thank you for enduring the last couple of weeks. I had to take some time off. If you are I'll just give you like a quick overview, just kind of let you know what happened in case you're new to the show, as everybody sort of filters in and we get up and running. My name is Brad. I am the host of Technically Options here on Benzinga. We meet every Friday evening at 5 p.m. Eastern time. We've been off the last couple of weeks. I had a surgery scheduled for Monday. What day was that? August 2nd, I believe. Yeah, I think it was Monday, August 2nd. It was planned, so I was already off that week. And then after my surgery, I ended up catching COVID. And so we've been down for, it's been like 2.5, 3 weeks going on now. We're fine. My wife and I actually got it. We just sort of quarantined ourselves in the basement and binged watch TV. And I know there's been various cases of it, and there's a lot of seriousness with COVID and everything. We did not have like the super bad strain or whatever you want to classify it as. We were sick, but we were thankfully we made it through. So that's why I had to take an extra week off. I was supposed to be back last Friday, but we ended up I wasn't able to. So we're back to as good as I'm going to get. But thank you guys. I appreciate all the messages, and I had a lot of people that reached out and checked in on us, and I appreciate that. And I'm just excited to be back into what I consider to be our normal routine of life. And thankfully, my wife is good as well. Our son, we have a 10-month-old son. He's good as well. We had a lot of family that helped us out, and we were able to endure. So again, a big shout out to you guys. Thank you for checking in. Thank you for waiting around while we got healthy. So just to give a quick overview of what we do if you are new, and then we're going to move on to the show. We are here every Friday night at 5 p.m. Eastern time. So if you are new, click the notification bell on the subscriptions. You'll get a live notification every time that we go live. And amongst all of the other content that we have here on Benzinga, you'll also receive notifications about that as well. Other than that, we typically talk about options trading with technical analysis. We also talk about kind of like overview of the options market. We talk about some of the big trades of the day. We talk about some of the big trades of the week. We go over unusual volume. We go over open interest. We go over IV, all the Greeks, things like that. We do a little bit of everything on the show. But again, we focus on options because I am an options trader. So we focus in on that. I am also big into technical analysis, so we focus in on that. But prior to my 2-week hiatus, we had begun to talk about the options flow and how to trade. If the audio sounds all right, will you guys just drop a 1 in the chat? I'm making sure. It sounds weird in my headset, but I just want to make sure that the volume is good and everything, since I'm just kind of flying solo. But just drop a 1 if everything sounds good. We started talking about unusual volume. We started talking about how to trade the flow, basically with unusual whales. That's a subscription service that I use, and then I also use Benzinga Pro. I use those two things as a combined system in order for my main style of trading is to trade the options flow. Basically what I do, this is as of like my new sort of system, is Monday through Thursday. We are typically trading farther out expirations. And when I mean farther out expirations, I'm talking about like maybe like end of week or next week. We don't trade like real far leaps or anything like that. Monday through Thursday is typically when I'm building positions, I'm following the flows and things like that. And then on Friday, we typically reserve that more for like lotto style or scalping style plays. And so I have a system set up 4 days that I do the following the flow, and then 1 day I do scalping. But over the last, I'd say 6 months or so, I've really sort of developed this system of options trading that relies heavily or even mainly on following options flow. If you're not familiar with what options flow is, it's basically level 2 data for options trading. This is a way of seeing all of the option orders that are going through the tape. However, we filter it to make sure we're seeing the stuff that is going to point us in the right direction of finding plays. We don't want to just sit and watch the tape all day long. And, there's a lot of information that goes through. And even if you were only to watch like SPY or SPX, those options, it'll come in every second. There's a lot of data that comes through on the tape, and it actually can cause you to be a little bit, it can cause you more harm than good if you just jump on blindly and start following the tape. There's a lot of things that go on with it. I'm trying to develop a system for you guys that works for the style of trading that you do. If you are a swing trader, if you're a scalper, if you're a day trader, whatever it is, we try to develop a system that will help you. We also try to talk about at the beginning why this system will work for you or why it won't work for you. So if you are the trader that is not able to watch your plays intentionally, if you are only picking up plays here and there throughout the week, if you are trying to build long-term positions, scalping options or day trading options is definitely not the system for you. That will cause you heartbreaking pain. You definitely don't want to do that if you are not able to monitor your plays consistently. However, there's also a system that we can develop for you guys if you are, longer term. If you are trying to build farther out expiration options, if you're trying to hedge a position or whatever it might be that you are as a trader, we can help you to design a system that works for you. I always say this as well. This is my system. This is how it works for me. This is the style of trading that this is after years of tweaks and after studying and after a lot of practicing and a lot of going through different styles of trading. This is where I have landed on as the system that has worked the best for me. So don't be discouraged if you hear the system that I use and it does not fit with the way that you're trading. Don't be discouraged. There's plenty of things that you can take and adapt to your system. We try to make everything very user friendly, very just very, we don't get real in depth with strategies for options trading and things like that. We also are very interactive in the chat. So if you do have questions, please feel free to drop them in the chat at any time. I will answer them as they come in as much as I can. But if we get into if I'm kind of like rambling on a thought or something, I'll circle back around and come back around to it if I can. Towards the end of the show, we always try to reserve some time. And now we're the last show on Friday nights again. So if we go over a little bit, that's fine. We can. I try to be done by like 10 minutes after 6 at the latest. But if you have a question, just please drop it in the chat and we will make sure that we get to it. And then if there is something that you really want to connect with me about, I am Trading Grounds on all social media. My website is tradinggrounds.live, TRADING. I'm actually just going to drop it in the chat. That'll be easier. You can access all of my social media accounts. You can access my Discord channel. You can access my trading view charts, a little bit of everything. If you have any interest in communicating with me a little bit more after the show, please find me on one of my social media accounts. I love to interact with the followers. I love to chat, love to help you grow in your trading. I don't charge for anything. I don't have paid courses. I don't have paid alerts. I don't have paid Discord rooms. I don't have paid nothing. We just do this for free. We enjoy teaching, and so that's what we're here for. So please don't hesitate to ask a question if there is something that comes up and you don't get a chance to have it answered on the show. Again, we'll try to circle back around at the end. Other than that, we'll just carry on throughout the evening. And if, like I said, feel free to interact, and other people in the chat that are here as well, they may get to your question before I even do also. So with that being said, tonight we're going to continue. We have a lot to get caught up on because, again, we were off for 2 weeks. So depending on how far we get into tonight will really determine the trajectory of what all we are going to discuss. But a couple of things that I just like to always go over, some of the big numbers as far as what were the big option trades of the week, what were the big option trades of today, where you could have really focused in on some of the bigger plays and how you could have succeeded as an option trader this week. If you have a ticker that you're interested in learning more about as far as from a chart perspective, or if you'd like me to pull up the flow to see some of the bigger trades that we had, feel free to drop that in the chat as well. I'm going to go ahead and flip my charts on. We are pulling up first Microsoft. Microsoft was an absolute cannon. And man, I'll tell you what, if you had the opportunity to get in Microsoft yesterday, some of those contracts, I mean, the premiums on them spiked so quickly. It was quite an impressive run that Microsoft had. maybe not quite as impressive as Netflix. However, both of those two, there were some, man, you could have really, you could have, yeah. So my friend Ryan, my bestest friend, my bestest schmentz, as Doug or Dwight would say on The Office, he nailed, you know, like I'm telling you what, he nailed plays this week. He nailed a Netflix call that we had at 54 cents that one time it was at like $8, $9. He nailed Microsoft plays. I mean, he honestly, and I'm not like pumping him to like, cause he's like, you know, got a class or anything like that. I'm just saying that like, he really nailed some plays this week. He and I, we trade together consistently every day of the week. And we work together on the weekends as far as charting and watch lists and things like that. And shout out to him. He really had, he made some good plays. And so I post that up there because we always are joking around about how, like, you know, we cut a loss too quick or we cut a game too quick. And, you know, then we follow the chart later on and we're like down, like, you know, it's like we missed out on $1,000 of profits and things like that. But you know, it's good to, you have to like accept that that's going to happen as a trader. You're not going to get everything right. And you are going to cut losses, or you're going to cut a winner too soon and you're going to miss out on profit. It's just how it is. You know, however, develop into your system a way that you can, you know, sort of recover those things throughout the week. You know, but when you're going into a trade on a Friday, for example, there is there is a, you know, on Fridays, a lot of us do, we do Lotto Friday plays where we get involved. We call them lottos because typically they don't hit, but kind of lately they're really hitting. That's not, you know, getting to say that it's going to hit every single week. You know, but for example, one of the plays was, I mean, the Microsoft play from this morning, for example. Let me get this pulled up so I can pull the chart up to give you a little bit of an understanding of some of the alerts that you could have. Let's look at Microsoft first. Let's go to the, let's see here. Let me get my, I don't even have my brokerage pulled up, so I want to see the chart from some of these Microsoft calls, because that was the big play today. Roblox was another good one as well. I think that could have, you could have really done good on that. Let's go to the Microsoft. Let's do probably the 300. Let's do the 300 first. Let's look at what the 300 opened at this morning. All right. So the 300 was at 9:30. It opened at $1.15. At its peak, it was at 5.85. That's crazy. Okay. So again, that's a lotto play. All right. Because at the time, you know, Microsoft was on an absolute tear, absolutely. But Microsoft opened today at 297.62. So yeah, I'm still on Tastyworks. If anybody, I'm not going to get onto a brokerage rant. I am in the process of identifying where I want to go to next, but I will. Like, I wish I could just use. I don't really know what I'm trying to say here. I've used every broker, and I feel like I get a month or two of consistent, you know, the platform runs great, and then all of a sudden it just dies. I'm having some problems right now, but thankfully, like charting softwares and other things like that, I've really nailed down what works good for me. If you are not familiar with what you see on the screen right now, this is TradingView. This is where I do all of my charting. This is where I do my intraday trading. This is where I do my long-term charting and things like that. I use TradingView for all of my analysis and what I watch on a daily basis. I don't use Tastyworks for their charts. But again, you could have, I mean, you can see the volume spike too right here at the beginning of the day. And then it consolidated in a zone basically from 334 up till its highest 498 after it hit that original spike of 587. Okay. So that was a lotto play. That's when you go into a play knowing, okay, like when you play a Lotto Friday, you know in advance that you were going to lose that money. Okay, that's the best mindset you can have when it comes to playing one of these Lotto plays. A Lotto play, just to kind of give you an idea, is something that is out of the money. That is, it is very low chance of paying. Okay, so again, you're looking at end of day data on what could have I mean, there was a lot of good plays you could have made today between Roblox, between Nvidia, between Microsoft. Also, if you're not familiar with Nvidia, just to kind of give you another shout out to Nancy Pelosi is heavy in Nvidia. We it's kind of like so Unusual Whales has a section that they do all of like the Senate plays and Congress plays and stuff like that. And so he does a really good job of alerting all of the big stuff that happens with these moves. And so Nvidia, it was like they, he posted something that that Pelosi was really involved in Nvidia, and then prices of contracts just started going crazy and volume went crazy on it and stuff like that. That's like a good thing to monitor as well too, because what you could do, let me actually pull up Nvidia since we're talking about it right now. So for example, on the Nvidia calls, here's your bulk of the volume is between the 195, 190 call all the way up to about the 230. Nvidia closed well, right now it's at 208.33. But then if you scroll down here, let me show you this one, this 250. There was 4.4 thousand contracts traded on this. That's the 250 strike for next Friday. So right now it's $42 out of the money. It kind of seems like that's like a lotto play, but there was 4.4 thousand indicators or volume contracts traded, not indicators. Sorry, there was 4.4 thousand contracts traded on that just today alone. So that kind of tells you that if you see something like Nvidia or something like Microsoft or one of these big boys, and you see a call or a put that is way far out of the money, that's got a ton of volume. I'm talking maybe over 1,000. 1,000 is probably the base. Let's go 1,000 and above. If you see something like this, that is a good indication that somebody knows something. I don't know if you've ever heard that phrase before, but like, typically when you see like an insider is dumping shares, or if they're buying a lot, or if you see a lot of like, stuff going on in the dark pools and there's a lot of commotion behind the scenes, somebody knows something. Okay. Now, I don't know the times and I don't know the volume as far as before I saw this alert and then after. So I don't know necessarily if this 4.4 thousand is before or after the Pelosi news came out. However, it's a substantial amount of volume for a call that is $42 out of the money on a large stock like Nvidia. And the reason why I say, like, I point this out specifically is because of this number right over here, this IV number. IV is the implied volatility of the contracts, basically stating how much of a chance there is that these prices can spike both ways, up or down, like based on, based on a percentage. So Nvidia has a 41.3 implied volatility, which is basically middle of the road, nothing great, nothing horrible, but there's little chance that Nvidia, because the price of the stock is $208 per share, that there's little chance that Nvidia is going to have huge spikes up and down. Okay. So as you kind of like are building your system, there's a lot of things that you sort of like can identify as an options trader. Number one is always volume. That's, I think, is the most important thing when it comes to trading, is you need to follow the volume. You need to follow the flow, follow where everybody else is going. Don't try to reinvent the wheel. Go where everybody else is going. Like, listen, like, don't have like one of the things that you're going to, as you are a trader, if you have an ego, your ego is going to be consistently destroyed, because it sucks to like think about going on your own and think about you nailing a play, and then in reality, like, you missed it really bad. Like, allow yourself that, like, it's okay. Like if everybody else called it and you also called it, that's fine. Like, don't try to be that one guy that's able to, like, well, I called it. Like, yeah, it's cool to do that. And it's really nice. Like, as I kind of look over trades for the week, or if I'm talking with my friends and a buddy of mine says, we picked this play up on Wednesday night, and then by Friday it was this. Like, it's really good. It's confirmation that your trading system is working. Absolutely. However, it go where everybody else is going. That's what I'm trying to say. So as you see a contract that has 4.4 thousand contracts traded, and it's on a stock that's got a 41.3% chance of spiking, there is something there. Okay, that's it. That's a definite indication that this needs to go on your list. All right. Now, in reality, is Nvidia going to be at $250 by next Friday? The chances of that happening, according to, is 0%. Now, literally, is there 0% chance of that happening? No, but that's supposed to give you an indication of how likely this call is going to finish in the money or not. chances are NVIDIA is not going to be at $250. Now, again, there's also like, you know, crazy things can happen. And now, like, come Monday, when more people start to catch wind of Pelosi having all these calls and stuff like that, NVIDIA is going to get probably a nice pop. I've got, you know, a couple of scattered lotto plays that I've got out way into September and stuff like that to try to build off of, you know, any hype that we have. Is it going to be $250? I mean, chances are very, very low. For it to run up, it'd have to run $42 in 7 days. So you're basically trading it at about $6 per day with zero pullback at all. It's got a foot on the gas Monday morning right out the gate and not stop until Friday. Again, chances are very low. However, you have to remember, as an options trader, especially an options trader like me, like, I'm not concerned with exercising any of these contracts. I'm not concerned about buying a contract in order to own the shares. I've literally never exercised a contract. And let me say that again. I've never exercised a contract. I play options to trade option contracts back and forth. I don't play options in order to have the shares. I don't play options in order to hedge a long-term position that I have. I trade options because I like the volatility. I like the action. I like the consistent amount of volume. It works better for me. You know, on and on and on. But when I am buying a contract that is for a company that's at $208, if I'm buying a contract that's the strike is $250, I have no intentions of riding that call out till it gets to $250. Now, again, when I'm playing something, now let's say, for example, if you were to play a little bit closer to in the money, okay? And if you're not familiar with what in the money, out of the money, stuff like that means, in the money basically means your call has now, it's met its area where it needs to be considered profitable. Now, again, that's not to say that your premium is not profitable. That just means that you could execute it and it's in the money, and you are now this is a great point. Good to see you too. Thank you. I appreciate the encouragement. There's always a chance of a small gain, even if it doesn't reach the strike price. That's exactly the thought that I was trying to articulate in my head. So basically what happens when you buy a contract, if you buy a contract for $1, okay, and it's for the, like, let's say, for example, let's just use this 250 again. So somebody bought this. Let's pull up the chart and see what it was doing today. Okay, so where is the, okay, so August 20th right here. So here's August 20th, this opened at 5 cents and it had a spike to 6. Okay, so there's not much that I laughed because that's very funny. There's not much movement, but you can see that at one point, okay, the NVIDIA, it was 11 cents. And then another one, it was 16 cents. And then you can see that this, like, you can see that the as we're getting closer and closer, obviously the price is going to go down. However, there are these little spikes that you could play. You could have bought this one at a penny and then sold it for 11 cents. So a 10-cent gain. You know, if you are buying contracts that are a penny, I'm assuming you're playing more than just one contract. But this little movement right here, obviously, NVIDIA is nowhere near the strike price of the contract that you bought. But what your focus is, it's this premium right here. You bought for a penny and you sold for 11 pennies, okay? That's what your focus should be. Your focus should not be on, okay, I'm buying the 250, so NVIDIA, in order for this contract to be profitable, NVIDIA's got to get to at least 245. No, don't even concern yourself with that stuff when you are playing. If you are getting into options trading to trade contracts, and I'm talking about just not executing, not hedging, not doing any crazy strategies. I'm talking about just buying and selling calls and puts. Your focus should not be on the stock getting to that the strike price. However, it does help. I mean, let's just be honest with ourselves. If you buy a contract and your contract is now in the money, obviously your premium is going to be much more than what you bought it at. So that's something that you want, absolutely. But don't think that in order for you to be successful as an options trader, the strike price has to be now in the money, because that's not at all true. The closer you get to that being in the money, obviously the price of the contracts are going to go up. But just because you're buying a contract and it's way far out of the money, you are still able to capture some of that little bit of profit. So that's why it's important to see, like, when you add the volume in, when you add the implied volatility, when you look at the flow to get a better idea. Let me actually let's pull up NVIDIA and see what some of the we'll go to the intraday analysis and let's go take a look and see what some of the big trades were for NVIDIA. Okay, so if we go and look at today's action, you can see that it was actually not a huge bullish. The biggest one was actually today. Somebody sold $9 million worth of the 167.50s. That's crazy. 3 million, 3 million, 2 million, 2 million, 2, 2, 2, 1, 1. Okay, so these premium, this is the total dollar amount that whomever did this order spent. Now, you can also see here that there was, which is interesting because normally there's a lot more. There was only one large contract. Now, we'd have to go into the flow and really evaluate and things like that. But the biggest option trade today for NVIDIA was somebody that sold calls, meaning they opened to sell. Okay, and I know there's like when you see, like, for example, you see this call and then you see the bearish indicator. You have to remember that if you are selling calls to open, that's bearish. If you are buying calls to open, that's bullish. If you are buying puts to open, again, that's bearish. Like, you have to you have to remember that when you are buying to open and selling to open, they reverse. So if you buy to open calls, that means you're bullish on it. If you buy to open puts, that means you're bearish on it. Just keep that in mind. Again, I know that it's always confusing because you see, like, you call and then you see bearish, but calls mean typically you're going to be going up. Just remember, somebody when you see this sell call, you have to remember that somebody sold those to open. That was their opening position. That's why it's bearish. That was the largest trade today for NVIDIA on the 167 strike. But again, as you kind of like look through these here, you can see there was a lot of dollars traded on NVIDIA. There was a lot of action today. And even if we go down here too, the most active chain, the 820.205 call, 820.205. Let's look at that. There was 161K. Okay, so the NVIDIA 205s, they opened up today at, where did they open at? Like 42 cents. Yeah. Okay. So this is a perfect example of a Lotto Friday call. So the NVIDIA calls, they open the NVIDIA 250 or 205s. They opened at 54 cents, and then they closed at, basically the spread was $3/335. That was the most active chain of today. You can see the 820 calls, the 205 strike. There was 160,000 contracts traded. Okay. The open interest, also, if you're not familiar with open interest, let me just give you a quick explanation of what that is and why it's important as well. Open interest shows you the amount of contracts that are not executed as of the prior day's close. So volume is in real time. Volume is showing you as the day is going on. Open interest shows you the prior day. Okay. So as of yesterday, there was 49,465 contracts that were open on the 205 strike NVIDIA call. Just today alone, there was 160K. So now, depending on how the numbers will work out, if you were just to take those two things and mash them together, that gives you an indication that there was almost 210,000 total contracts. Now, remember, they expired today. So out of this 49,000, there was probably a substantial amount of people that closed contracts. They took profit. They executed whatever they did as per their strategy. But it shows you what, like, just think about that for a second as we kind of look through these. Now, the 827.210 for next week's a big call, the 827.205. But as you can see, the most active chains were typically today's calls. That's because there was with NVIDIA, there was a news event or a catalyst or whatever you want to call it as, that gave enough of a push to get some of these contracts really moving. And as you saw, so the 205 contract, again, if you open this contract today, the 205, it opened at 42 cents. It hit a high of $3.45. That's a pretty good return on your Lotto Friday play. That's a pretty good return on, and even like, so say for example, here's another one. Okay. So yesterday at 10:48 a.m. August 19th, this call was 11 cents. You could have bought this call for 11 cents. Again, at its high, it was $3.26. That's a very, very substantial gain. I don't know the percentages and stuff like that, but that's a large. I mean, even if you bought one contract, again, if you're buying contracts for 10 cents, 11 cents, again, you have to remember it's times 10, so it's $10, $11. But you should be buying more at that such a low amount. I'm not saying do it. I'm just saying per your strategy. Like on that type of a play, I would minimum buy 5 contracts. So again, if you have that big of a premium like spike, if you go from 11 cents to $3.24 and you have 5 contracts, that's a pretty substantial payday. Okay. That's why, again, that's why if you are trying to let's take a pause real quick. Let's just say this because this is always something I like to remind people of. Options trading, it is dangerous, it is scary, it can make you bankrupt, it can make you you can be you can blow your account up. Let's just say it that way. However, it does not necessarily always have to be that way. You can put the work in and understand how options are traded, how you can be successful at them. You can set yourself up for success with options. Don't just completely write options off as something that you are not going to do. I am not encouraging you. Let me say this again. I am not encouraging you. Let me say it one more time. I am not encouraging you to quit your day job and become a full-time options trader. Not encouraging you to do. I'm actually telling you to do the exact opposite. Okay. If you come into options trading with the mindset that you are afraid of them, that you are going to lose all of your money, if you are scared of options trading, you are not going to succeed, plain and simple. But you need to have a healthy respect of options, okay? You need to understand that, yeah, we talk a lot about these huge runners, okay? We talk a lot about these big gains. We talk a lot about the contracts that spike like crazy. But you have to remember that there's stuff going on the opposite end that somebody went from the other way. Somebody lost that much money. Somebody had a contract that they bought with hopes that it spiked and then it reversed on them. It can happen just as easily. Either way, it can spike high, it can spike low. But what I think the best thing that you can do as you are developing your options trading strategy is to understand that, like, listen, like there's a lot of these 100, 200, 300% runners. There's a lot of these 90% runners. There's a lot of these big spikes that we see. However, your goal should be to just get on base, okay? Just to use a baseball analogy, this is the one that I've adapted and I really like it per my strategy. Your goal is just to get on base. If you can get on base 3 times, if you can bat 300, it's 3 out of 10 times for MLB, I think is what the good average they consider to be. That's Hall of Fame. If you get on base 3 out of 10 times, 30% of the time, okay, that's going to put you in the Hall of Fame. It's not necessarily the guys. Now, don't get me wrong. Watching people hit home runs are great. Like that's what puts people in the seats and stuff like that. But you know what really pays the bills? Those consistent singles and doubles that you add up time after time after time. And every time you sit down in front of your screens, the goal for you should be to, I'm hitting a single, I'm hitting a double. Obviously, if you are playing something that is in a clear uptrend, let it run. Okay, like let it run, but don't also get greedy where you're now out all of your profits. Like that's got to be something that you tweak according to your capital and your strategies and stuff like that. Like that's got to be something that you do on your own. But if you are developing a strategy that gets you 10 to 30% in profits, okay, and I'm not talking about, like if you want to do it daily, monthly, week, whatever you want to do, and I'm not saying that you're going to make this every single day of the week. I'm talking about your goals, okay? I'm talking about before you are even taking that trade, what is your goal when you are entering into the trade? Is it to hit a home run? Is it to get 500% runners? Is it, what is your goal as you are taking that play? My goal is smaller. 10 to 30% throughout these trades that I make during the week. Those are going to add up. It takes it's much more of a realistic goal. Okay. That's another, when people start to trade options, that's what they automatically think is going to happen. They're going to make these huge runners. They're going to make these unbelievable, like, just home runs that they're going to hit every single time. That's not the reality of options trading. Like, listen, like, we can go through a lot of trades and you can see a lot of negativity on some of these trades. Yeah, we point out the big runners. We talk about, like, but that's, like, because that's what our goal is. Obviously, our goal is to point out where you could have made money on these trades. We're not trying to, like so, Baron, it's good to see you, brother. Thank you. I appreciate the super chat. Thank you. We are definitely back at it. Thanks for Baron's a good friend of mine that we've connected via social media, and I appreciate your concern with the family and just checking in. Somebody said I like to hit home runs and whiff. I hit a lot of whiffs too myself. But but again, as you are like that's what we're evaluating plays like this, because obviously your goal, we're being serious with one another. Your goal is to find an NVIDIA runner like this, to run from 11 cents up to $4. Like, that's your goal. Like, my goal is not to find you. Like, what did I do the other day that was like a 11-cent gain or something? I was scalping. Somebody said AQST. I apologize. I missed AQST. Let me AQST calls. I've never even heard of. Let's look at AQST real quick. There was literally no volume. Okay, so that's the sign. This is actually a good way of this is a perfect example. Okay, no, very good. This is going to work out good. Let's take a look at the chart first. AQST. All right. So what's one of the things that as you look at this chart, what's one of the first things that pops out? This stock has the ability to what? Spike. It has the ability to be pumped. I don't know anything about this company. I don't know. I assume it's a biotech company. I don't know. Somebody said analysts are wrong one. Somebody said analysts are loving it. That's good to hear. Never heard of AQST, but chart looks interesting. It's either about to pop or drop. Yeah, that's exactly what I see as well. You have just as much of an opportunity to spike or to drop pretty quickly. Okay, so keep that in mind. All right, let's keep that in mind. What do we see here on this chart? This is the daily chart. We see spikes, we see drops, we see spikes, we see drops. It's in a clear, if we go from our high up here, it's in a clear downtrend, absolutely. However, it's got a pretty solid base support right here at this $3 range. But you can see that there's, like, right here it went from $1.31 up to $6.80. Right here it went from $3.93 up to $9.45. Right here it went from $4.59 up to $8.07. There's quite a bit of range, okay? And as we just were saying, what does that show you as an options trader? Let me click back over here. It shows you this number right here, implied volatility. Implied volatility, again, if you missed it, is the percentage of a chance that the stock has to go up or down rapidly at a huge movement. And as you just saw on the chart, there are more than, I mean, we could even go back even farther. There's a ton of spikes. There are numerous occasions where this stock went from $2.85 to $9.96, where it at one time was at $18.42, and it dropped all the way down to, if you played it, $1.37. So FDA run up opportunity. Okay, so there you go. So it's a biotech stock. They've probably got something on the radar with a news event. That's why you see these big spikes up and down, up and down, up and down. That's what we refer to as the implied volatility of the contracts. As you see here, 216%, 262%, 168, 145. Those are really, like, those are numbers that should flash in your face and give you an indication of something happening with this stock. Okay, there is a reason why. Okay, now Sandal is another one. I have an implied volatility list right here. If I sort all the tickers by the IV index, we can get a Donnie says about to go all in on AQST. Listen, it might not be a bad idea to have like, some like out of the money calls or something like that. Here, let's take a look real quick and see what we could do with this. So AQST right now is at 365. Obviously, the 820s are done. So let's move on to September 17th. Now, another thing, too, I want you guys to see as well is if you notice on AQST, there's only these monthly contracts. Like, for example, with NVIDIA, if you remember, we had these Ws, we had all these extra contracts. The bigger plays, the NVIDIAs, the Teslas, the SPYs, all of these big names, they have what's called weekly contracts. Weekly contracts expire every Friday. Monthly contracts expire the third Friday of every month. AQST, due to the volume, due to the lack of attention, wherever you want to describe it as, only has monthlies. So your next contract that you have a chance of playing on AQST is the September 17th monthly calls or puts. We have 28 days to expiration, and today the $5 contract had 15 contracts sold, okay? And I chuckle because that's a very, very low amount, okay? Now, normally what you'll see on contracts that have such a high implied volatility, you're going to see really low amounts of volume. Now, I say that kind of jokingly a little bit because Sandal, as we just mentioned, if you go in here and look at Sandal, the implied volatility is over 200% on the next 3 contracts. But you can also see that the $1 Sandal call had 3.1K volume. Okay. It's going for 2 cents. If you know anything about Sandal, it barcodes, meaning it's algo traded back and forth. It's got a range of like 2 or 3%. It really just trades in a small area. However, if you know anything about Sandal, Sandal has the opportunity to spike really quickly. So if you get in on some of these contracts really low, you've got a chance to flip them for a pretty substantial gain. One of my best trades ever was on Sandal. I was in Sandal contracts at like 2 cents. And the next day, I think we saw it coming through on the flow. It was actually Benzinga had the alerts out that there was unusual activity with some of these calls. We got in on it. It spiked the next day, went from 2 cents to 11 cents. Obviously, again, if you're playing a 2 cent contract, you're not just buying one. You can do the math. It was a very, very good trade. But you can see that Sandal is one of those that they've got pretty consistently. They've got a lot of volume on their calls. Why is that? Sandal is a well-known name. Sandal is something that it always is one of the volume leaders. There is always a ton of volume. Again, you have to remember, though, that there is Sandal is trading in a range. Okay, so it's going to not move that much. It's going to move a penny or two. It might move 4 pennies. Like it does not. You're not going to be able to retire just basically playing on Sandal calls. Trust me, it's not going to happen. But it is something that you need to be aware of because these types of plays have the ability to really put a lot of money in your pocket. Again, it's not going to be something that's going to consistently happen. It might not ever happen. But I show you Sandal because AQST has a similar setup to what Sandal does. Sandal and AQST are both of these stocks that have the ability to really spike. But you have to remember, it's not just up. It has the ability to spike in the other direction as well. So you see AQST here, the volume is just basically non-existent. 18 contracts on the $5 November 19 was the big trade. Actually, I think the August 20th had 60. Yeah, that was the big trade. But for stuff that's not expired as of yet, you know, again, your volume. This is the first thing I look for when I take a look at a contract. Volume is the number one thing that I look at. And I just don't see volume there. But then I see this implied volatility, and that would at least spark my interest. That would at least get me to, okay, so why is the implied volatility so high on this? Obviously, like, had you guys not mentioned this stock, I would know it would not be on my screen right now. There would have to be something that comes up on my unusual flow or my volume alerts or something like that that puts me in front of this stock because, again, I'm not looking at AQST. I don't play biotechs anymore. You know, every once in a while, I'll you know, if I know something, you know, if I see something, I might get involved in it and stuff like that. But this is typically not a stock that I'm going to play. So there's got to be something that triggers me to see it. And what would happen that could cause me to see this is a volume alert, is a unusual amount of activity going on with the contract. As you can see here, there's a very low amount of volume. So on a stock like that, it doesn't really take much volume for something to trigger, for an alert to go off that says, hey, listen, there's some movement on this stock. You need to pay attention to it. But a stock like AQST, it might be good for you to kind of like, as you're sort of, if you are new to options trading and you're trying to figure out like where you should play. Let me also mention that don't play Teslas, don't play SPYs, don't play these big names. If you are new to options trading, that is just setting yourself up for disaster. Like do not get involved with these weekly contracts. I always tell people, if they are new to options trading, the best place for you to find contracts to trade, 20 days out, 40 days out. That's typically the range to kind of to stick yourself in. 20 to 40 days. It gives you enough time to experience all the ups and downs, the changes. You're not watching candle by candle. You can set yourself on the 1 hour chart or even the daily chart. You are getting yourself a chance to be successful. And when you're playing weekly contracts, they are so volatile. It's just, I don't recommend doing that. So AQST somebody just said that the monthly looks good. Let's take a look at the monthly. Yeah, no, I mean, it's again, there's obviously the opportunity that there is a weekly chart has got a nice double bottom here. I like that. That's not too bad. But again, it's sloping down. What you're going to basically need to do here on the weekly chart. Let's just draw a quick trend right here. Give or take that one little wick right there, but it's touching 3 or 4 times right there. This is the area that you're looking for a breakout. But as you can see this section right here. See this right here, that is your big volume shelf. That's an area that is going to cause you some big time resistance. So keep in mind that as you are getting involved in a trade so I use again, my main indicators are volume. I have really sort of I've turned off a lot of my indicators that I used to use. I am focusing mainly on volume and price action and things like that. So this over here is what's called the volume profile. This gives you an area of you are seeing the volume by the price, and it's showing you basically what we call a shelf. There is a big volume shelf right here of an area of resistance. Obviously, if the volume is above you, that's an area of resistance. If it's below you, it's an area of support. So you can use it for both ways. You can see, okay, am I getting involved in a trade and I've got to go through this big area of volume, or am I going to be using this as a level of support, knowing that the chances of this going below, there's little chance of that happening. So how do you turn on the volume profile? Okay, so depending on your broker, depending on what pattern, or depending on what platform you use for your trading. I am on TradingView. So when you are, if you are on TradingView, if you go to volume profile, you can go to the volume profile visible range. You can go to session volume, go to fixed range, whatever you want to use. I use visible. So basically what happens as we'll do this here. Whoops, sorry about that. As you are, let's go back to the daily. Oh, you are on TradingView. Okay, perfect. Then this is exactly what you need to do then. Okay, so one more time, let me just show you again, just in case you missed it. Click on the indicators and go to volume profile and click on visible range. Okay, then what happens as you scroll, you see how the volume disappears. You see how it gets more. You see how it's giving you it's the visible range, the candles that you have in front of you right now. These are going to spike based upon the volume. Now, another thing that I do on my volume profile, I have all these things, I have them turned up. Okay. So I want to see more. I want to see based upon, you can actually change the row sizes to make them bigger. So you're not seeing, each individual dollar by dollar. If you don't want to, I like to see more data. So I've got my row size turned up, but you can go in here and you can make a lot of changes, tweak it however you want to. But it's the volume profile visible range. That's the name of the indicator that I use to show you this volume on the right-hand side. You can also put it on the left-hand side, however you want to do that. But what this volume is showing you here, this is showing you volume based upon the prices. So that gives you a little bit of an idea of where you can sort of, if you have a tough time getting support and resistance. Okay. If you if you are if you just can't quite figure out like where your support and resistance levels are and stuff like that, a great way to find them is by using the volume profile. That's the best way you're going to be able to see it easily. And you could see, like, for example, like, just real quickly, and then we're going to move on, like this section right here. This is your big area of resistance right now on this stock. Okay, that's your big area. That's out of all the volume, your biggest section is going to be from 550 down to like 497. That means there is a lot of volume in that area that you're going to have to go through if you are going to go beyond that level. That is again, somebody said they don't like stocks that explode on news. Again, when you get it, that's the implied volatility shows you, as we were just talking, I don't know if you saw that or not, but the implied volatility shows you that this stock does have a chance to do either up or down really quickly. Again, if you don't play biotechs, I'm the same way. I don't typically get involved in some of these stocks. However, they are good to be on your radar. I think it's good to maybe make a watch list of some of these types of tickers and receive alerts. That's another thing too that I think a lot of people forget to do, is you need to learn how to set alerts on whatever platform you're using. So like, for example, when you are, let's say, I deleted all my stuff off my board. You can go in here, and so Microsoft's now at this 304, and the high that it poked out. Just put a little alert on here. Put alert on here that whenever Microsoft crosses that number, you're going to get an alert. Okay, that gives you the opportunity to, on your watch list, like, you can have all of your tickers and things like that. You can have alerts set for them, and you're not having to. Somebody said, can we discuss Macy's? Oh yeah, that was another play that we have on our list today. But you can have all of your tickers on your watch list, and you're obviously not going to be able to watch every single ticker that you have on your list. But if you set alerts, you're at least going to be notified if you are trying to go to the long or if you're trying to go to the short, depending on your style. You learn how to set an alert. All right, so let's we got about 9 minutes left. Let's go to Macy's and see what's going on with that. Macy's was, let's actually do this. Okay, and then let's do this. Okay, so the first thing I'm going to show you on Macy's. Macy's had a pretty substantial play in the last 2 days. Let's switch over to the hourly real quick and get you a little bit of an idea of what we're working on here with Macy's. You can see a clear breakout from your previous resistance, which these little indicators here I use as a recommendation from a guy from one of my best friends, really, the guy I trade with consistently. He uses these, and it gives you an idea of where the daily high was, the previous weekly high, previous monthly high, things like that. You can see that there was a clear break of a previous weekly high. It went from the previous high, was showing you what, just about $20.39, and it went to $22.43 is what it's at now. But this is the big thing right here. That's the thing that you should pay attention to, is volume. And it's very, very clear that this volume spike right here was an unusual volume spike. And that gives you an indication to what now? Okay, there's something going on. Let's take a look at the most active chains. And you can see here that the options activity on Macy's was pretty substantial. Okay. There was, let's see here. So here's a big thing. You could see that price targets, it was also in the news for price target upgrades, which obviously, as the stock starts to run, everybody is going to now start to raise their price targets and things like that. But peers, if this sector is running, that would, a lot of times it causes some of the lingering tickers to run with it as well. There was quite a substantial amount of volume on Macy's out of nowhere. Okay. The biggest, I think, what caused and again, I didn't know the the earnings is what is caused this. Here, let's pull up Benzinga. It is right here. Now this was yesterday. Okay, so they reported quarterly earnings of $1.29 per share, which was up from a loss of 81 cents per share last year. Company reported quarterly revenue of 5.65 billion, which beat the estimate of 4.98. Okay, so right here, that's your reason why Macy's is trading higher. The catalyst, if you will, that's what put all of the volume into this. And that was yesterday. That was, again, you can see here, this was the action yesterday. That's what caused this to go. Now, is this something that, let's just take a look at the chart just from this angle right here. Is Macy's it depends really. When it comes down to is your view on retail. Okay. It depends on, I would not be, this gave you a great opportunity to day trade or to scalp. It gave you a great opportunity to get involved in a trade and get out rather quickly. Let's try to look at one of these big runners from the past. So let's go to the 2150 from today, and that would have been from, it actually spiked really big, and that was yesterday. It spiked so here's your change from overnight because of the stock running, but at its low on the 19th, it opened at 9 cents. At its high, it went to $1.10. There's a pretty substantial amount of movement on that. Same thing with this right here. You could have played this at its low of, what was that, 16 cents, ran to 89 cents. The 2150, the 86 to $1.01 is the spread on that. That's a pretty substantial play. Next week, though, for example, let's take a look at some of the contracts that are available for next week. The big mover was the $23. There was 10,000 contracts traded. The $22 had 8.15K. That's a pretty substantial amount as well. What was I going to look at? Oh, here we go. See, and here's another reason too. Morgan Stanley increased price target from $17 to $21. You can see that as as you can see a good earnings report come in like this on a company like Macy's, you're going to start to see the agencies start to upgrade their price targets if they agree. Obviously, like with a stock that reports that good of earnings, it's hard to not increase your price target, especially on something like Macy's, because especially if your price target was $17 and Macy's just blew by that, it's at $22.43, you almost have to increase your price target then, because now you're at the point to where, here's another one right there. They raised their price target to $19 from $16 after all of their earnings topped their estimates. That's another example. Raises price target on Macy's to 27 from 23, reiterates buy rating. Another one, 23 from 21, 24 to 21, 21 to 7. So you can see that what's going on with this, and all you can see, all these price targets and these news and things like that, everything is all built into Unusual Whales, and everything is also built into Benzinga Pro, whichever platform you decide to go with. I recommend both of them. I use both of them. They are fantastic. I use them all day long. I've got one monitor that I have Benzinga Pro. I have one monitor that I have Unusual Whales pulled up on, and I watch it all day long. But they are, to me, they are the most important resources outside of my charting software. So this gives you in one place this intraday analysis, just to give you an idea of what we're looking at here on Unusual Whales. You can get real confused easily with this. Is the live flow. We're just going to spend a couple of minutes showing you this real quick. This is the live flow. So this is showing you all of the options that are being traded as they are being traded. Okay, there's a lot of stuff to learn on here. And like I told you at the beginning, I knew we weren't going to get really in depth with a lot of this stuff because we're trying to get caught back up. But you can see that there is a lot of information on this screen. There's a lot to learn. You need to learn it. You can't just dive in blindly. You will lose money if you try to do that. You need to be able to spend time in the evenings, on the weekends, going through this data to try to learn more about, like where were the big trades and stuff like that. But a great place that you can start with if you are new to the platform, if you go to this intraday analysis and you search by ticker, this is going to give you a great place where you can spend your time as you learn the platform. It's going to show you the biggest option trades, because obviously, if you are deciding that you are going to see somebody who is trading the flow, somebody who is trading, options from a flow or an unusual volume perspective, seeing the biggest option trades is going to be one of the most beneficial things for you. You need to know where everybody else is going. You need to know where people are spending their money. Now, see, this is interesting too. 9/17. Okay, so that's the September 17th Macy's call. Those were the biggest movers. Okay, so the $23 one had 24.5K, the $21 had 25K. There's a pretty substantial amount of volume all the way up 28 days out. Okay, there is enough volume that far out to tell you that, as you see this volume here and you see the implied volatility, 68.6%, that's getting a little bit higher than what we were looking at with NVIDIA. But that's giving you the impression that now here's something interesting too. This one down here has 115%. So that means these contracts really spiked. There was some movers on the November 19th, but just back to the September 17th, this is the area where the big amount of volume was today. Again, you can see there 24K, 25K, 4K, 2K, all kinds of there's a substantial amount of volume that is coming in on Macy's. But again, you can go back to just this section here, intraday analysis on unusual whales, go to your biggest option trades, and this is going to show you very easily where the big movement is on options trading today. So somebody said GameStop, somebody said MC, and then they post rocket emojis. I'm sorry, guys. You're not going to want to hear what I have to say about AMC, so I'm just not even going to go down the road. If you follow me on Twitter, you know my thoughts about AMC. But the problem is you can't really rationalize people that are playing AMC because they immediately assume that you're wrong. So, I wish the best of you guys holding AMC still. I don't know why you'd still be holding AMC. You'd be, diamond hands. That's why, because you want to post your diamond hand emoji. That's exactly why. But listen, I people that are playing it on a consistent basis. I scalped it. I didn't long term it. I think you can day trading AMC would be the way to make money. I don't know why you would want to hold it because of the chance of it running to $1 million or whatever per share. This crazy number that people are coming up with. I said I wasn't going to talk about AMC, and now I'm not going to talk about AMC anymore. And see, this person right here just gave me a perfect example of what I was talking about, because we know what we're talking about. That, perfect example. Thank you for proving that point. I appreciate that. But if you're looking for an area to sort of figure out, identify the tickers that you're interested in playing, and you have to do that first. You have to make sure you're not just going to blindly start to go through the flow and pick things out, because that's going to confuse you more than anything in the world. There are so many. Again, you think that there's a lot of options being traded, but once you start to view the flow, then you really see how much options are traded. Develop your watch list and then narrow it down that way. Develop your system of whatever tickers you're going to watch, and then start to investigate that way. See where the volume is going. Look at your implied volatility. Let's see. Somebody, we're not going to talk. I'm sorry. We're not talking about apes and AMCs and stuff like that. The important thing for you to do if you are trying to develop your options trading strategy is to at least have one watch list that is your tickers that you follow, that like the back of your hand. Do this as your weekend homework. And then next week we will talk about this, and we'll get a little bit more in depth with trying to pull apart some of the trades from the flow. Develop a watch list with 20 tickers. Okay. I don't care, what they are, but make sure that that they are, first off, they have options that you can trade. And second off, they are options that can be traded per your capital. Obviously, if you don't have the capital to trade Tesla contracts, don't put Tesla on your watch list. Put on there that you are put on their contracts that you are actually going to be able to trade. Put on there that you are don't waste your time going through tickers that aren't going to be able to be traded. If you're not going to be able to trade, if you're not going to be able to trade, then don't put the don't put the what's it called? Don't put the ticker on your watch list. Why would you put a ticker on your watch list that you're not going to be trading? Yeah, it's cool to know what Tesla's doing. It's cool to know what SPY's doing. It's cool to know some of the other ones, stuff like that. However, if you're not going to be trading those stocks, then don't put your energy into those things. Ask your buddies to watch Tesla for you. If you don't have the capital to trade Tesla, don't even concern yourself with what Tesla is doing. Your goal for this weekend, again, we'll end with this. Your goal for this weekend is develop a watch list with 20 tickers. Okay. Whatever sector you want to play, whatever stocks you want, it does not matter. Just make sure that they are option tradable and they are per your capital. Not what I would trade, not with whatever somebody else would trade, what contracts you want to play. That's your homework for this weekend. Next Friday night, what we will do is we will start to pull apart the flow. We will start to go through some of these tickers line by line. And then what we will do is we will develop a system as how you could trade these stocks in order to be a successful options trader. Again, if you're not an options trader, I get it. I know a lot of people are not. We are primarily discussing, or we're only discussing options on here because I am only an options trader. But there are things that you can do in order to increase your chances of being a successful trader in general. So do that over this weekend. Let's pause there. It's 6:06. We're already about 6 minutes over. I try to be no more than 10 minutes over. Let's pause there. Your homework for this weekend, again, is to develop a watch list with 20 tickers. If you can't come up with 20, come up with at least 10. Okay. I think you can come up with 20 pretty easily, but come up with 20 tickers, make a watch list with whatever platform you use, develop that over the weekend. And then starting Monday, basically what you want to do is you want to follow the stock and just see what it does as far as movement, watch the volume, get a little bit of an understanding. And then what we will do on Monday, or on Friday, I'm sorry, is we will start to pull apart the flow. Again, if you are interested in communicating with me outside of the show hours, let me put down my website one more time. Somebody said it hired me with all the profits. No, I have really just, I can't have a dirty office. It's actually I had everything focused that way to make it look very, very clean, of course. But my basement is finished. And so I have, I have a pretty nice setup down here that my wife has allowed me to have. So I just like to take care of it, like to make it clean and things like that. But yeah, so we will, I think that's about it. Any other? No, we're good. I think we're going to roll from there. So again, thank you guys all for tuning in. I appreciate the conversations tonight. Appreciate the encouragement. Appreciate the questions, and had a lot of fun as always. We're here every Friday night at 5 p.m. Eastern time. Make sure you click subscribe, click the bell so you receive notifications. Benzinga has content all day, every day, market hours. There's plenty of content to keep you educated. There's plenty of stuff going on that you can learn. We personally would love for you to join every Friday night, 5 p.m. Eastern time. Again, we are talking specifically about options trading. I am here to help you throughout the week as well. If you look me up on any of my social media accounts, please feel free to send me a message. Love to communicate with you guys. If not, I will see you guys next Friday, 5 p.m. Eastern. Have a wonderful weekend. Stay safe. Spend your weekend studying, get that watch list prepped, and next week we'll start to go over it. See you guys.